Governments keep printing, gold and Bitcoin keep doing great.
Prediction that Bitcoin would be $1 million by 2030.
Because I believe Bitcoin has a 10x in front of it here in just like the next 5 or 6 years. 2 things in life that are certain are death and taxes. Third thing is money printing. So there's all types of issues in LA that with real estate. We almost got killed. We got chased. They tried to block us off on the freeway, and we're like, okay, we're never going back to LA again.
Hey guys, welcome to 10X Money Talks, man. Today I have a great guest, Mark Moss, investor, educator, chief Bitcoin strategist at Satsuma. You got your show on YouTube, which is Market Disruptors, right? And then your book was The Uncommunist. What does that mean to be uncommunist?
So in 2020, I'm sure you really remember that time. I remember watching the news and hearing the head of BLM go, "We're trained Marxists." I'm like, what the heck is a trained, what does that mean? So I read back through the Communist Manifesto, and I'm like, somebody's got to offer a rebuttal to that. And so the uncommunist is a rebuttal, and it's not a tit for tat, but like a much better world based off of capitalism versus socialism.
Yeah. And so what do you think about, I mean, when you use the word communist, all I can think about is the guy running for mayor in New York.
Sure. I mean, you think of communist, you think of socialist, or Marxist, those words can sort of be interchanged. But in the Communist Manifesto, Karl Marx wrote 10 points of communism. So that's the definition. And actually what he says in the book, I think this frames it up for us, Grant. He says, to summarize communism in one statement is the abolition of private property.
Yeah.
So that's it in one statement, abolition of private property.
You're talking about the dude, the Megami guy.
No. And Karl Marx wrote in the Communist Manifesto,
Got
to
it.
summarize communism in one statement is the abolition of private property.
Which means that nobody would have private property.
You own nothing and be happy.
Yeah, and that by the way is the number one thing that Megami is running on. He does not want private property.
Yeah. So they don't want private property. They want to control all banking and all means of credit in the hands of the government. They want to control all the education. They want to control all the airways, right? All of those things are points of communism. Unfortunately, when you look at America, about 8 of those 10 points, we have them. So do we have a capitalist system or a communist system? It's a bit of a spectrum, but it's pretty well laid out.
Yeah. When did you, Mark? Let's go back. When did you first get interested? I mean, you're married 22 years, like I am, 22 or 23 years. Yeah. Congratulations. Two beautiful, both daughters, right?
Yeah, both daughters.
I got daughters too, man. How did we get so lucky?
I love my daughters. They're amazing. I think we got lucky because we worked really hard for it.
Yeah. Well, I know I did. I don't know how I don't feel any of the pain of your work.
Yeah. Well, I think when I say work hard for it, just on the family side for a second, right? The men are the leaders, and I think we drive the family, and I think our family adapts to that, right? The wife and the kids. And so I hear a lot of people complain that my wife doesn't do this or my kids don't do that, but like we set the pace. And when we drive ourselves to be the best versions of ourselves, then they come along with that. And so that's why I said, like, we got lucky with wonderful wives and kids, but like we set the pace, we set the tone for that.
Yeah, you started investing in real estate, foreclosed real estate back in the mid 90s, right? That's when I got invested in. How old are you, by the way?
I'm 50.
Oh, wow, dude. So you were like, what, 18 years old?
I was 18. I was right out of high school. And my best friend at the time, my roommate at the time, his grandfather owned a savings and loan bank. It was called Downey Savings and Loan. You might remember that bank. It's out here in California. But he was giving hard money loans. He had a hard money line. He was giving it to his grandson, and they were buying HUD or taking HUD properties 0 down. In California, there was a glut of them, and the banks would literally give them to you 0 down, just cover the closing costs. And so I got my first property. It was a VA repo. It was an $80,000 duplex, and I got it 0 down. I had to come up with like $3,000 for closing costs.
Dude, this was a crazy time, folks. Those who don't remember, the mid 90s, there was a savings and loan debacle. 600 plus banks or savings and loans went out of business.
Yeah.
You could not get a U-Haul to go back into the state of California. They were all going out. Everybody was leaving. I started buying real estate at the same time. Mark, then you moved into internet stocks. Why did you quit investing in real estate and then move into the internet thing? Or you You got
It
bored?
it wasn't one or the other, just like you, who's got my money. So we're like looking all over the place, right? So it was the real estate thing was going for me. In the late 90s, I started investing into these internet stock things, right? Like a lot of people did. And at the same time, in 1999 here in California, I was like, oh, dot-com boom, let's launch an internet company. And so I did that with some partners. Then the dot-com bubble crashed. 2001 built up an e-commerce company that took off really, really big. And so built that e-commerce company up, sold that off. I had a high-tech medical equipment company that I built. I sold that off to the largest company in medical, Henry Schein, and I had the real estate going at the same time. So we kind of had like three things going. The sad story for me, and this fast forwards, but from 1995 to 2005, I had like the best bull run that you could ever imagine. And so coming out of high school and jumping right in, it was 10 years. I took an $80,000 duplex and built it into $25 million of real estate.
Wow.
But then I sold the two businesses. I believe that I was supposed to sell my businesses and buy passive income. That's the path, right? So I sold my businesses that I knew everything about and made tons and tons of money, which is why they wanted to be and why they were sold off. And then I put into a bunch of real estate, and then 2008 came. And in Southern California, real estate dropped 60% in 12 months. And
what were you buying, Mark? What kind of real estate were you buying?
Well, so what happened is I started with the single family homes up in South Central LA. And this was in the mid 90s because we didn't have any money, right? So it was like we're buying $80,000 homes, $100,000 homes from the bank. And so we're in South Central, Compton, Watts, like white boys in the hood. And that was at the height of gang culture. If you can remember back that time, that was like Colors and Boys in the Hood, NWA, all that. So we're up there. And we were doing them over and over and over. And we had sort of a system down. But if you remember, like taking a bank-owned repo, a lot of times I have to get the people out of the house.
Yeah.
And so here we are, a couple of white boys from Orange County driving up to South Central, and we have to get these people, black people mostly, out of the house. And, we had our system down. We'd buy them out and things like that. Anyway, we almost got killed. We got chased. They tried to block us off on the freeway, and we're like, okay, we're never going back to LA again. So I'm in Orange County, and I bought a house on the beach, like 700 grand, developed it, sold it for like 1.5 million. I'm like, oh, what am I doing driving to LA? So then it was all Southern California or South Orange County real estate, multi-million-dollar spec homes mostly.
In 2008, I mean, you were mostly focused on single family flips, or
it was single family for the most part. I had just done the two projects that were sort of like my last two projects were I did a multiple condo unit building. So I did 3 condos with the subterranean parking, but this building I'm in today is mixed use. So it's retail below, residential above, subterranean parking. It was like a $12 million building. We had this building for sale for 12 million. I took an offer for 11, turned it down, ended up going back to the bank. The bank sold it for 4.
Wow.
Today I rent from them. But yeah, it was crazy, from 12 million to 4 million, just like that.
Have you always looked, Mark, for opportunities as an entrepreneur? Like, what do you think was driving that you're, I mean, 18, you're an entrepreneur, 25, you're buying,
I think what it was my dad was a construction, my dad was a contractor, right? So, self-employed, small business, entrepreneur, what we'd call them today, right? And he made me go do construction with him. And I think the benefit of that was seeing how money is made. So go get a job, bid it, get the materials, finish the job, get the payment. And so for me, it's always just been, how do I go make money? Like the thought of like going and getting a job has never crossed my mind. It's just, how do I make money? And then I find opportunities that I can make money. And I think it's that frame that I approach the world in that sort of created all these opportunities.
And then what did you learn from the real estate thing? So before we move into the crypto,
well,
what did you learn?
I learned a couple things, some important ones. Number one, I learned that there's no such thing as good and bad timing. There's good and bad strategies. So there's always a good time to make money, but you have to have the right strategy. And so when the market turned down in 2008, 2009, there was tons of opportunities. I just had the wrong strategy for it. Number two, I learned about risk management. All I had known as a bull market. I'm an action sports guy. I've broken almost every bone in my body. I'm screwed back together, all my limbs. And so my risk tolerance is extremely high. And, I sold my companies and I just put all my chips in, and I didn't keep a safety net. I didn't have any income. I didn't have any. I sold all my income properties. Like I'm all in on these couple developments, and that was a problem. So I didn't. I operated without a safety net. And then I think the third piece, specifically more around real estate, was and risk management in general. But like in real estate, like you make your money when you buy, right? I was doing spec homes that couldn't. For example, I had one home that was like 2.2 million and it would have rented for 4,500 bucks or 5,000 bucks. So they couldn't cash flow themselves. So
Right.
when I came back into real estate, which I still own a lot of real estate again today, but it was always like, okay, can this property cover the payment? And am I okay to just hold this property forever? And that's sort of my approach that I went forward with.
Yeah. And back then you think you were just, the risk management was out a little bit.
Yeah, I mean, there was no risk management. I mean, just like a quick example, my first apartment building I had bought up in LA, it was making tons of cash flow. I didn't need the cash flow because I had my businesses. So I had it calculated to pay down the principal so it'd be free and clear by the time I was 40 years old. And I was like, oh, by the time I'm 40, this will be 15, 18 grand a month of just pure profit. I'm like, and I would tell people, even if I live on a park bench until I'm 40, I'm set, right? So like
Right.
that was like my safety net, and I admitted it was my safety net. But I refinanced it. I pulled capital out. I put it down on some new projects. Right? It's like, why did I have to sacrifice that one? Couldn't have I just kept one property? So that's what I mean. Yeah, certainly no safety
Yeah.
net.
Oh, so you kept recapitalizing that or putting new debt on it.
Yeah.
Let me ask you now, on that property in LA today, what's the name of that property? Do you remember?
The street it was on was called Zoe Zoe Street. That's what I called it.
Good location or marginal or what?
No, I mean, it was a good location. I mean, back then it was, I mean, it's LA, so it wasn't like Beverly Hills by any means, but it was a pretty good location. Huntington Park is the city it was in.
And what were the rents back then?
Oh man, now you're asking some deep questions. I can remember the street name. The rents, they were, they were 1 and 2 bedroom apartments, and I think they were, $600. Well, the problem with LA today is, as you know, man, now there's rent control, right? So there's all types of issues in LA that with real estate, I'm probably better off not owning that building today. With rent control, I don't really know what the rents would be, to be honest with you. That's a good
But
question.
look, even with the rent controls, like some of those rent controls I see over there, I'm like, shit, I'd love to get a 10% increase every year.
Yeah. But my guess is, today, based off of, appreciation where rents have been in California, I'm guessing that building is pulling in, 18, 20 grand a month of net cash.
Now you're in this new world, this digital world. It's not so real. I mean, it is, but it's not. How did you make that transition from real estate to real businesses to now in this crypto?
So as somebody who is, I feel like I'm lucky enough to sort of be at this age where I've straddled both worlds, right? So like I'm still young enough to get the tech side, but I'm old enough to have kind of been there without it. And I benefit from the history of understanding these cycles. So I started my first internet company in 99, tried to ride the dot-com boom. And then I started an internet company that crushed it, and we exited that as well. So I'd sort of been involved in that. And after I had some money, I started doing some more investments, venture capital type stuff and some tech stuff. What happened is, probably like a lot of people that went through 2008, I had PTSD. And at first it was like, again, after getting wiped out, it's like, what just happened? Like, I'm really good at making money, but I'm not paying attention to this global macroeconomic picture. What is going on here? I need to go figure that out. Dust myself off, tell my wife, like, look, trust, I'm going to figure this out. Like, this is not going to happen again. And so I just went deep. I spent, a decade in the macroeconomic world investing into investment newsletters and going to conferences. And I very quickly found out the problem is fiat money. The problem is the leverage that built up in the banking system. And once I understood the problem, then I kind of became a gold bug. Oh, gold. We need gold. We need sound money again, right? I was still, then I started making money again. I launched some more marketing business, some internet businesses, started building my assets back up. In 2015, I was in the process of setting up a trust in Panama. There was a guy named Simon Black. He writes a newsletter called Sovereign Man. And I was watching this, and it's all about flag theory, multiple passports, multiple bank accounts, multiple countries. So I'm working through this network, and I have an attorney in Panama setting up a trust for me so I could move money out of the United States because I think the banking system is still fragile. Which it is, get money out, and then I could work on citizenship there and stuff. And I took another look at Bitcoin. Of course, I had heard about it years before. And I took another look at Bitcoin and I thought, wait, this is the same thing I'm trying to do. I'm trying to get money out of the fiat banking system. And so I understood the problem I was trying to solve. And so then the solution of Bitcoin became very clear to me. And then I very quickly realized that I'm not a gold bug, I'm a sound money advocate. And so that was sort of my first entrance into Bitcoin, coming at from that angle.
And then are you still a gold guy?
No, no. I mean, gold's doing great right now. It's crushing, but I own like negligible amount of gold, like around your hair gold.
I have never owned any gold. I don't understand the gold story. I've never bought any. My brother has. My brother had a freaking closet full of it. I'm like, what are you doing with this, dude?
Yeah.
Just in case.
You understand Bitcoin now, so you understand gold. It's the debasement trade, right? JP Morgan came out with that article a week ago called the debasement trade. So governments keep printing, gold and Bitcoin keep doing great.
Do you see a correlation between the people that believe in gold or the fiat debasement and the Bitcoin thing? What is the string that commonality?
There's commonality, there's differences, there's something that's common, there's something that's different. So first of all, what they have in common is that they both believe that, they say there's two things in life that are certain are death and taxes. The third thing is money printing, right? Governments are going to continue to print money. And so as long as they continue to print money, you'll need to buy assets to protect yourself. They'll go up in value. Then the question is, what asset do we buy? So that's the gold narrative, right? They're going to keep printing money. So gold is real money. We're going to buy real gold, right? Or real money, which is gold. So that's what they have in common. Bitcoin is also a debasement trade. As they keep printing more money, then we can protect our purchasing power in Bitcoin. So that's what they have in common. What they have different is that the gold narrative, unfortunately, is very doom and gloom. It's like, there's this Mad Max scenario where fiat crashes and you better have some gold in your safe to barter on the street. And so it's all based off around doom and gloom, which I don't like. I don't believe in that world. I believe in prosperity. I believe in abundance in front of us. We just have to, again, change our strategy. And so Bitcoin has that protection, that hedge against debasement, but it's also a tech play. It's also it's a digitization play, right? It's a digitization of capital and credit, and so it's also like a very positive, healthy growth message, not just a doom and gloom message.
If I had to guess, what is it, a bullion or a coin?
Yeah,
and the coin's worth $200, or the slab's worth $4,000. How do I get rid of that? The idea that the Bitcoin is divisible into pennies is something I can give my tenants when they walk in. I can literally give them a wallet with a Satoshi in it. Becomes very valuable to me as a marketer and as a property owner, because I can't give a sliver of gold to somebody.
Yeah.
What was the aha moment? Because you have that marketing background, you have that entrepreneur, you're looking for internet, you're looking for cracks in futures. What was your aha moment with Bitcoin that got you invested?
Yeah, well, first it kind of came back from, like I said, I understood gold and I understand the problem I was trying to solve, and that's what got me in originally. But the aha moment for me was when I realized that to the point that you just brought up, all of the problems with gold that were there that prevented it from working in today's information age were solved. And I thought, all of a sudden, we finally have a tool that we can change the world with. Like, this is something that instead of just like being a libertarian and like hoping people get better, we now have a tool that we can change the world. That was sort of like the big aha moment for me. I will say that I then, because I had this tech background, I sort of fell down this rabbit hole of, it's not Bitcoin, it's blockchain. That's the revolution. And then I started writing a cryptocurrency research newsletter, and I started publishing research on all the cryptocurrency projects that were out there for several years. So I started doing that. And after about 4 years of publishing research, probably 1,000 pages of published research on every project, privacy coins and decentralized exchanges, et cetera, I kind of then came to the realization, okay, none of that matters. It's only Bitcoin.
So where are you with the other coins? How many different altcoins are there? Assume that I know nothing.
Yeah. So like in 2016, and at the end of 2017, sort of Bitcoin's first big bull run that people paid notice to, there was about 2,000. Today, I believe 2,000 other coins, altcoins. Today, there's on CoinMarketCap, there's like 19.5 million listed.
19 million coins.
Yeah, 19 million coins. And the problem with them is that I mean, there's a lot that we can go over, but Bitcoin is a commodity, so it's a protocol. And what do we mean by a protocol? It routes packets of data, like the internet routes packets of information, TCP/IP, like your internet protocol. It routes packets of data. Anybody could use it. Anybody could build an internet application on top of that protocol. Nobody owns the protocol. It just routes packets of information. Bitcoin is very similar. It's just a protocol. So all it does is route packets of information. Nobody owns it. Nobody controls it. Anybody could build on top of it. Whereas the other 19.5 million cryptos are private companies where a group of people have come together to develop it, build it, and have control over that. And so they're more like an equity. They're more like a company versus Bitcoin sort of being this protocol commodity.
Do you think I should have a coin? If there's 19 million coins, I'm like, why don't I have one?
Yeah. Well, I think what Trump wants to do through some of the executive orders that he did this year is make it much easier for businesses and people to raise capital using digital tokens. And so instead of making you go through 3 years of, public registration process, millions and millions of dollars, like why not just allow small businesses a path to just go raise money and potentially, artists or maybe someone like you could sell tokens for like a fan club or some other way. Why should you do that or why shouldn't you? Why shouldn't you do it is because as a business owner, you know this, you're a sales guy, our job is to lower the friction that it takes to bring somebody in, right? So let's say that I'm at Dave & Buster's, the video game place, right? And I'm there, I got to meet somebody in like 15 minutes and I'm just like waiting. I'm like, I'll just play a game. Oh, they're $3 or $4. That's great. Oh, whatever, I'll play. I don't care. $3 or $4, right? And I go to put money in. Oh, but they won't take my credit card.
Right.
So I got to go stand in line over there and buy this card and put money on it. And I'm like, screw it. I'm not going to do that. Right. So they created too much friction and it prohibits me from taking action. I would have given them some money. I might have dropped $20, $30, but now I don't. And so what we want to do is we want to lower the friction. And that's why having one universally accepted medium exchange that has enough liquidity matters. If everyone has their own token, if I have to buy this token to interact with you, I don't know if I want to do that. And I'll go to somebody else who doesn't make me buy the token. So that's why you shouldn't do it. So there's pros and cons.
That's why I should not do it.
Right, because what are you doing? You're just going to create an extra step or hurdle that somebody has to do business with you. And so that's a problem. But there's also pros, like I said. So the pros are you could maybe raise some money very quickly. If you have like a fan club or say for like your 10X, for example, you could raise money selling it as a token. And those people that have the token might get special benefits if they bought it. They might be able to trade that token. So there's a pro, but there's also a con, right? If I could just spend dollars with you, I'm probably more inclined to do that.
On Friday, we had, I don't know, somewhere between 20 and $100 billion liquidated in a period of maybe 20 minutes.
Yeah, crazy.
Can you explain, Mark, what happened and how many people probably learned a lesson? And should I feel sorry for those people that got liquidated Friday?
Let's start with the should you feel sorry for those people. I would say that smooth seas never made a skilled sailor, right? It's the lessons, it's the losses that teach us the lessons. I was actually talking to someone about this on the weekend. The reason why 75% of lottery winners and pro athletes go bankrupt in 5 years is because they didn't really learn how to make the money. And once they lose it, they don't know how to get it back. And unfortunately, you have to lose money a bunch of times to learn how to handle it, right? Like you've seen that, right? So it's like, as much as those lessons are tough and they suck and we hate them, it's what builds up that muscle for us to be able to manage it when we get there. So it's a normal part. But what I would say is it's not as bad as it looks. And so what do I mean by that? What we're talking about when you throw out that number is that's the amount of positions that were unwound in these leveraged, highly traded or highly leveraged positions that people are trading. So for example, they're trading at 20 times or 50 times leverage. So it wasn't like they lost all those billions of dollars. They might have put up $1 to control $5 or $10 of trades. And that's really the gross number. So it wasn't as big as most people think.
But they got wiped out.
Their positions got wiped out. Sure. Yeah.
Yeah. So see, I don't even know people buy on margin at 100 times.
Dude, 100. And then what they're doing, Grant, on top of that is then they're chaining them together. So now I've got a 20x position on this one. That's a 20x position on this one. And now they've, done that 3 times. The amount of leverage that was built up in the system was insane. And what I would say is it's a bigger symptom of two things. So it's a bigger symptom of two things. Number one, The entire Bitcoin market, the volatility has decreased since ETFs went live a couple years ago. And so we've seen the volatility compress down, but also the volatility across the overall market. So the S&P 500 hasn't had a single 1% drawdown since August. Like that's unheard of. And so what that does is it creates complacency, and then people start adding that leverage in there because there's no volatility. And so the complacency led to that. So it led to this too much leverage built up in the system. So cleansing that out is kind of a good thing overall. Number two, what I'd say is that we can see that the world today is highly over financialized and over leveraged, where one random tweet can literally send the market down, and then another random tweet on Sunday night brings it back up again.
Do you think it was the Trump tweet that did it?
I think it was, yes. There's a conspiratorial hat that you could put on that would say that a lot of these crypto trading exchanges potentially use that as cover to unwind a bunch of positions. You could also say that, but I would say it probably was that news. I don't know if you saw, but somebody front ran that news.
Right.
Somebody made a lot of money. I think $100 million front ran that, trading right before the news broke and closing the position at the right time.
Yeah.
And so
maybe it was Barron. I think Barron's getting really rich.
Yeah, I mean, maybe it was Barron. I mean, have somebody that knew that tweet was going to go out. Nancy Pelosi is the best trader in Wall Street, of course, but she probably didn't know Trump was going to tweet that, so I wouldn't blame her.
Yeah, something to be said about being an insider, though. You definitely want to be close to the action. How do you see Bitcoin solving some of these problems? Because I think like my audience, they see this big, tank on Friday, and they're like, this is why I hate this space. Real estate people do not want that kind of volatility.
Yeah. So a couple of things I'd say about that. So number one, most people look at volatility as a bad thing. They don't want that volatility. But volatility is things moving up and down. So we want prices to go up. Well, that's also volatility. And so I want prices to go up even more. Well, that's even more volatile, right? And so we have to look at it going both ways, number one. So it's not a bad thing. It's something that we have to manage to, and it's to our advantage if we learn how to manage it. Now, real estate's not mark to market on a daily basis. So real estate's also volatile. I mean, most of the country is sort of underwater right now. I own a property in Austin, Texas. It's gotten completely smashed in the last couple of years, right? So real estate's also volatile, but it's not being marked to market on a daily basis, so you don't see it as much. But what I would say is, with Bitcoin, we have to understand that, it's an emerging technology, so it's growing rapidly. And what we have to understand is the mechanism as to why, and then we have to have the right time frame. So let me give you a real estate example of what I mean. This will work for your audience. If I went to my city hall tonight and I was at the city hall meeting and they told me, hey, in 7 years, we're going to build this new football stadium like 45 minutes out of town. I'm like, dude, that's amazing. I'm going to go tomorrow morning and go buy some land up around there because I know in 7 years when that stadium grows, it's going to be worth a lot of money. So I do. Let's say a year from now, I find that land right next to my land went up for sale. It's cheaper. Should I freak out? What do I do? Well, I don't know. Why did I buy it? Well, they're going to build a football stadium. When? 7 years. Okay, so 7 years. Is it still intact, right? Did they have the plans, the permits, the funding? If all those things are true, then I don't care, or maybe I buy the land for cheaper, right? Now, if I discover that they discovered like nuclear waste, I'm like, oh shoot, sell the land at a loss and just get out. And so that's what I'd look at. Like, is the reason I bought Bitcoin, is that basis trade, that debasement trade, is it still intact? Did Bitcoin security fail? No. Right. So then I would hold and I could look past that volatility. And then if we zoom out a second, over the last 2 years, Bitcoin's up 300%. Over the last 3 years, Bitcoin's up 400%. Over the last 5 years, it's up 1,000%. So on Friday, it dropped 8%.
I took a position Friday. So
yeah, right. So, and that's because you understand the long-term picture, right? You understand the stadium is still being built. I'll buy the lot next door to me.
That's a great analogy. Where do you think that stadium's being built today in the crypto space? Like where are we 10 years from now? I think you had a prediction that Bitcoin would be at $1 million by 2030.
Yeah. So I love your 10X brand. It's perfect for Bitcoin because I believe Bitcoin has a 10X in front of it here in just like the next 5 or 6 years. And I have the math.
10X from here.
10x from here. Yeah. I mean, I put it around $1 million, right? 14 million by 2040, 50 million by 2050.
Wow.
And I think that might be bearish. And here's where I came up with those numbers. We buy a lot of things, but at the end of the day, wealth is the goods and services that we buy. And what happens is after we make our money, we typically park it somewhere. So we have what's called store of value assets. Real estate, obviously, right? We store our wealth in real estate. We store our wealth in equities. We store our wealth in bonds. We store our wealth in gold. We store our wealth in collectibles, fine art. And if you add up that basket, the store of value baskets, it's about $1 quadrillion today. 1,000 trillion. Now, a decade ago or 15 years ago, it was like 300 trillion. Today, it's 1,000 trillion. Why is that store of value basket growing so big? It's because of the money printing that's going on. So not just the US, but we look at total global liquidity. And so we can see how much total global liquidity has been rising. And then we can measure that by the store of value assets getting bigger and bigger and bigger. So what we do is we take a historical CAGR, compounded annual growth rate of those store of value assets. And then we add in, and then we compare it to the money supply increase. And then our own government, the US government, the CBO, Congressional Budget Office, they publish what these numbers will be for the next 30 years till 2054. So they tell us what they think the deficit spending will be, the total spending will be, the debt levels will be in 30 years from now. So then we take those spending levels and we can sort of extrapolate that based off of the past and the forward, and how big will that store of value bucket get? And by 2030, that should be about 1.6 quadrillion. By 2040, that'll be about 8.5 quadrillion. And then the question is, then at that rate of growth, how much of that basket does Bitcoin get? So I believe that by 2030, it gets to about 1.25% of the basket. And by 2040, it gets to 8%. Now, let's just check those numbers real quick.
That's 12 trillion, somewhere around.
Yeah, it's 21 trillion. It would be 21 trillion by 2030. But is that realistic, right? So if I was pitching on Uber or Airbnb 15 years ago in Silicon Valley, I'm like, oh, it's going to be worth, $300 million. You're like, where'd you get that number? Well, Uber, taxis and limos, if I can get 5% of those markets. So yeah. Uber and Airbnb both captured 10% of their market in less than 10 years.
Wow.
And I'm only saying Bitcoin gets to 8% of that basket in like 30 years. Which I think is undershooting that number. So we have to understand the basket is getting bigger, and the percentage of the basket that Bitcoin gets continues to get bigger as well.
Yeah.
So that's how I've got those numbers.
Yeah, no, I like that. I like the rationale behind it. And if you're 50% wrong, you're still at 500,000.
Right.
But it's going to get bigger. So everything's going to get bigger, which means debt is going to get bigger. How concerned are you? Because I hear these doomsdayers on X, they're like, oh my God, we have too much debt. I'm like, bro, that's been said for 60 years.
Yeah. Yeah.
Is there too much debt? And will we have more debt in the future because of this pie growing?
We as individuals or the government, or just the total debt pile altogether?
Well, probably both. I mean, the government.
So all across the board, we'll have more debt. And here's why. Since 1971, when Richard Nixon took us off the gold standard, we are in a pure fiat monetary system. We're in a debt-based monetary system. What that means is that money is created through debt issuance. That's how money comes into creation. So the very fact that the money supply is increasing means that the debt grew, because that's how the money was created. So when you go get a house, a car, a boat loan, that money is created into existence through the debt. So yes, of course, the debt's going to get bigger and bigger because, again, right, that's what it takes to get the money supply bigger. Now, is that a bad thing? Well, I mean, sure, there's a lot of reasons why it's a bad thing. Overall, though, like the nation has $37 trillion of debt today. Is that a bad thing? Well, I could argue that if they pay that debt off, it's probably much worse, because that would cause massive deflation if you destroy that debt, right? The money supply always has to continue to grow. So the problem really comes down to how manageable is that debt, right? You used a lot of debt. Is it bad? Well, not if I can manage it properly, right?
Yeah.
I didn't manage my debt properly in 2008. I got blew up. So as long as you can manage it properly. So one, yes, the debt is going to continue to grow at an enormous rate. The CBO shows this amazing chart. It's like a hockey stick through 2050. You can see the debt just going up like that. So yeah, it's going to continue to grow.
Yeah, I think, and this idea that I need to manage the government the way I manage my household, I think it's a bit of a morphed conversation, because the truth is the government's not a household.
Yeah. What I would say about the debt too is contrary to Dave Ramsey, is you and Robert Kiyosaki, who you guys may not be such good friends with each other, but you both push debt. And even Trump was called the king of debt, right? And so you have to understand when I was a kid growing up, my parents would be like, hey, it's not like we have a money tree. Well, we do. We all have a money tree. It's called the bank.
Exactly.
They'll give us money whenever we want. And so because we're in a debt-based monetary system, not a gold equity system, because we're in a debt-based system, the way to build wealth is with debt. That's the way to do it. Now, you can be Dave Ramsey and you can save your way, but you won't save your way to wealth because we're not in an equity system. Now, you can save your way to wealth with Bitcoin. You can do it, but that's Bitcoin, which people think is an investment. I consider it savings. But otherwise, we want to use debt.
What is your perspective on like our debt compared to all other countries' debt? Everybody has this problem, right?
Everyone has this problem. The benefit of the United States is we have the world's reserve currency. So we have that benefit there. Obviously, that's shifting and changing, and that's dynamic. And in our lifetime, we'll certainly see that change. But as of right now, we have $37 trillion of debt. One thing that I heard Howard Lutnick say, and I'm sure you appreciate this as a business person, but when Lutnick came in as the Secretary of Commerce, he's like, one thing that we hear about the government all the time is we hear about the total debt, we hear about the debt interest payments, we hear about the debt to GDP, but as a investor, business owner, there's a number that I'm looking for that I've never heard. What's the balance sheet?
Yeah.
Oh, 500 trillion? Like what, 1,000 trillion? Like is 1,000 trillion of balance bad against $37 trillion of debt? Right. So I thought that was a very interesting.
Meaning our assets, our total assets in the U.S. government.
Yeah. Yeah. And so, you asked, is it bad, right? Yeah, it's bad. 37 trillion. Right now with rates where they're at, right, we're spending over $1 trillion of debt. It's just debt service alone on the interest, right? So that's a problem. That's money that can go to other places. But at the end of the day, I think it's worse almost if they paid that debt off. That would cause massive deflation. And so we're sort of trapped, which is why really when we look at things, the future is so certain. What is certain is that they're going to have to continue to print money to pay for the deficit. In order to print that money for the deficit, that's going to push asset prices higher. So that goes back to the third reality. The governments cannot stop printing money. So we just understand that. We go long in our positions and we just hold and we don't deal with the short-term volatility.
So what are the beneficiaries of printing more money?
Well, all asset prices for the most part, right? Because and this is
all assets, Mark, would be what? Just give me a list.
The store of value assets, right? So that'd be not bonds really, but equities, real estate, gold, collectibles, cars, fine art, things like that, and of course Bitcoin. So those types of hard assets will be the best. Now, some assets are more sensitive than others, meaning some get more of that than others. And this is also a good point to bring up, right? The government tells us what CPI is, consumer price inflation. And when you look at things, they'll show you inflation adjusted prices, but that's not the real number. The real number is the rate of the money supply growing. So when you look at the money supply growth from 2020 to today, it's gone up by about 40%. And how much has gas and real estate and the S&P 500 gone up in the last 5 years? 40%. So that's the real inflation rate. That is the hurdle rate. That's the number that we have to beat. The only two asset classes that beat that number consistently is the NASDAQ and Bitcoin. And so those are the two places to do that. Now, with real estate, obviously you're using leverage, you're doing value add by building things like that. So of course you can get much better than that. But just the average median US real estate is about 40%, right? And so I think when you understand that metric, it starts to help you think about the world a little bit differently and start to allocate capital a little bit smarter.
And then where do businesses fall into those asset classes? Like where would you put them as a risk model?
Well, it's interesting because, for me being a hardcore Bitcoiner, I still own quite a bit of real estate, although I've gotten rid of my cash flow real estate. And I want to talk about cash flow on Bitcoin in a minute, because I think it's a really interesting take I have. But I've gotten rid of most of my cash flow real estate, my apartments, my rentals, but I still own my trophy properties, my beach house, my ranch property, et cetera, right? And the reason why is because I believe the hurdle rate for me with Bitcoin is 50% a year. It's compounding at about 60% a year right now. I'm just going to call that 50. So then I'm like, well, what can beat 50? And it's hard for a business to do a net profit of 50%. It's really difficult. Now, I own multiple businesses and I do regularly invest back into those because I do need money from somewhere. So that's kind of a tricky thing. I've sort of lowered a lot of, I used to do a lot of private equity and venture capital investments. I don't really do that anymore. I'd rather just buy the Bitcoin. I don't know if that answered your question or you want to know more what I think about the economy and businesses overall.
Yeah, no. I was just saying, like, I could go start a business.
Yeah.
I can go out and hustle a street corner today.
Yeah.
And somebody gives me $1,000. The return on that is infinite.
Yeah.
It required no investment, just a little bit of courage, my ability to communicate to somebody, stop
100%.
somebody in traffic, say, can you give me $1,000? I'm down on my luck right now. I'll give it back to you in 15 years when I get back on my feet. Somebody is going to give me that $1,000. The return on that investment is the best investment I could ever make in my lifetime.
Yes.
Now, what I do with the $1,000 next is a question.
Yeah.
But there's a lot of businesses out there, whether it's boring businesses, a laundromat or hair weaves or Botox injections, or I mean, there's a kid creating a YouTube channel and making millions of dollars a month.
Yeah,
that's what I meant.
Yeah,
like,
I love that you bring that up. And first of all, I just want to shout out to you again when you did that show, Undercover Billionaire.
Yeah,
and you got on that street corners twirling the signs. I mean,
yeah.
So good. And I tell everyone to go watch that video. Like, the American dream is live and well, if you're willing to put the work in. And so you did it. You went on the street corner, you hustled, you got someone to give you money, and you did it. So anyway, masterclass and kudos to you on that. But to the point then that you're bringing up, yes, we have to make money. So we need to create wealth first. And we create wealth by creating value or solving problems. So we have to create the wealth first, and then we can save or invest that wealth second. So you have to have both, 100%. You need to have the business, you need to make the money, and then what do you do with the money after you got it? So Bitcoin doesn't make you money. Bitcoin is what you do with your money after you've made it. Now, to the point that you also brought up, this is something I've been saying quite a bit recently. We're sort of in this interesting paradox today, where for the majority of people, it's never been harder. The average college degree person is coming out of college, or they're out of college and they're in that $50,000, $60,000, $70,000 a year job. Their wages are not keeping up with inflation. And the chance of them having any kind of retirement is like slim to none. It's a very tough life for that person today. They grew up in an industrial era school system, taught an industrial era lens, given an industrial set of tools. And that's not the world that we live in today. But the paradox is, it's never been easier to make money than it is right now. So you mentioned like start a YouTube channel or whatever, right? Like when I started my first business, my first real business, when I actually had an office and stuff, like that was like 1997. That was pre-internet. There was no YouTube for me to go watch videos on how to start a business or how to do marketing. There was no one online to even market to. Like, how do you even make money back then, right? Now you have all the tools, but even on top of that, and you know this, I'm sure all too well, since 2008 and now 2020, the government dumped in $12 trillion. There's just money sloshing around everywhere. It's like literally everywhere. So it's never been easier to learn anything, meet anybody, do anything with AI. And then there's all this money. So it's like the paradox, right?
Dude, it's like every time they print, I get happy now. Because while everybody's hating on the printing press, I'm like, dude, just get to the front of the line. The print is good if you're a hustler. The print is actually good if you're an investor.
Yep.
If you're in hard assets. So what would you do? I mean, we're going to continue to print. I mean, I think that's what I'm hearing you say over and over.
Yeah.
So who are the beneficiaries of the print?
Yeah. Yeah. So the rich get richer and the poor get poorer. I would say overall, it's a net negative because it's really bad on society. And there's a website, it's called WTF Happened 1971. Really cool. All it is a series of charts, and it shows what happened after 1971. We got off the gold standard, and it shows obviously prices and home price, all these things going up, but it also shows the incarceration rate going up and the unwed mother rate going up and like the, divorce rate going up. So it's bad society wise. That being said, you and I, we can't change this. So what we can do is we can save ourselves, and we can save those around us. And so how do we benefit from that, right? The rich get richer because the rich own assets, and the rich have income that can be adjusted with inflation. So like you have income from your apartments, well, when inflation raises the rents, right? You can raise your income that way. And we buy assets. So what we want to do is we want to do what the rich do, and we want to buy assets. We want to buy the assets that are the most sensitive to that money printing, and those would be the most scarce assets and assets we can use leverage on. So real estate is a good option because I can use leverage. I can use other people's time and money, or we buy something like Bitcoin that has that real high sensitivity ratio to that liquidity.
In your mind, what's the negatives of Bitcoin?
Yeah. In my mind, the negatives to Bitcoin would probably be that it's a very high barrier to entry from the education standpoint. And so it's going to take you some time to figure it out. That's number one. Number two, to really utilize it properly, it could be a little bit technology. It might be a little technology challenged or hurdle to get over. You could buy it just through your brokerage through an ETF, but to use it properly, you need to learn some technology, how to store it, how to custody it, how to protect it. I've lost millions of dollars of Bitcoin not doing those things properly.
You've lost millions.
Yeah, I have. So,
oh my God, dude.
Yeah, I mean, you're
really into this losing lesson.
I mean, adjusted for today's dollars, obviously, right? So like, I lost a bunch when they were $300 or $500 or $2,000 kind of a thing. But I'm just saying, so those are painful lessons that you learn along the way. So that's what I'd say. I mean, obviously, like I said, you could buy it through an ETF in your brokerage account, but to utilize it properly, there's a tech hurdle to get over and an education hurdle, but that's hardly a negative.
Mark, what's your handle on X? I'm trying to quote you for saying something on there now.
At one Mark Moss, the number one.
At one
Mark Moss, the number one Mark Moss. But what I would say that why I think Bitcoin is so powerful and unique, and I want to talk about this cash flow piece for a second. Yeah. Mr. Wonderful Kevin O'Leary is like, I want my Bitcoin to produce yield. If it doesn't produce yield, I'm going to figure out a way to produce yield. So they come up with some option strategy, or you could lend your Bitcoin out, things like that. Like it has to earn yield. But I would just challenge that a little bit, and I would say that what is cash flow? So if I buy a rental property, it gives me $300 a month, that's cash flow. But if I buy a property for $1 million, sell it a year later for $2 million, I mean, that's cash flow, right? So it appreciated, then I sell it, that's cash flow. And so we can look at Bitcoin.
You consider that cash flow?
I mean,
see, I wouldn't call that cash flow.
What I'm saying is, if I did that every year, so when I used to build properties, for example, I could flip 2 a year, and I'd make $300-400 grand per property, and so that was my cash flow, right? Every time I sold a property, right, that was like my cash flow. Yeah, and what I'm doing is just taking the definitions and bringing it down to like a first principles level, real quick.
Okay.
And so what I mean by that is it's cash flow. I bought it, I sold it, I made some money, right? If I'm day trading, is that cash flow?
I don't think so.
Okay.
I think, but I get it.
Okay. So what I was gonna say with Bitcoin,
I think cash flow for me is I buy something and then it automatically spits me out a check every month or every week. Yeah. A laundromat would be cash flow.
If you bought it for $1 and tomorrow you sold it for $2, that wouldn't be cash flow?
That would be a sale. I made a sale.
But you got income.
And now I've lost my cash flow.
But you got income.
No.
I see what you're saying. I got
a score.
And then now my score's gone. Because you lost the asset.
Yeah, I lost the asset. I don't want to lose the asset. I want to have the asset.
Perfect. Let's talk about
give a little bit.
So how can I keep the asset and get a little yield without giving up the asset?
Yeah.
Perfect. Okay, let's use that framing. So I buy a boring business, like Cody Sanchez would say, right? A laundromat or whatever. What am I going to get? 30%, right? 30% net on that, probably 3 or 4 times valuation. So what I could do with Bitcoin is a lot different than I could do with any other asset. And the reason why is because we have this asset that's now digital capital. On top of digital capital, we have digital collateral or digital credit. And we have this CAGR, this compound annual growth rate of 60% a year. 60% a year. Now, let's cut that in half. Let's say, Mark, that's not realistic. Michael Saylor says it'll probably do 30% for the next 21 years. So let's use 30%. Being a debt guy, as long as I can leverage it with debt for less than the rate of appreciation, I'm doing pretty good. So what we can do with Bitcoin going up at, say, 50% a year is I can harvest some of the appreciation with debt service. So let's say that I borrow, it's going up at let's call it 50% a year.
Going back to doing what you did back in 2000.
I take 10% off the top with debt. Now with debt, I don't pay tax on that and I don't lose the asset. So I still have the asset compounding. right?
Yeah.
And then I can just roll the debt each year. And as long as the asset is growing faster than the debt,
Yeah.
I can do that in perpetuity.
You sophisticated now.
I've learned some tough lessons. You said
Yeah.
how many do we have to learn?
Yeah. How many? Let me just talk about like what would your advice to be to people other than losing is the way to make you a good captain in rough seas? What's a way for me to learn without me having to lose?
Well, you learn from other people's mistakes. That's the best way to learn, right? So, lots of reading. I love history. History gives us a whole bunch of stories of cause and effect. These things happened, and so this happened. So, learn from history, learn from other people's examples, watch, pay attention. That's the best way. Unfortunately, what I've learned, and I believe to be true, is that some lessons in life can't be taught, they can only be learned. So like someone could teach you how to surf, like watch these videos, use the board on the sand, but until you put the board in the water, you just don't know. And so learn from other people, get someone to coach you, follow advice, sign up for a coaching program, get around some smart people, join a mastermind, do those things. But at some point you got to get in the ring and throw the punch. And then until you get punched in the face, you don't know what your plan is, right?
Yeah, dude. Like I've been punched in the face so many times. I just don't want to. I don't want to walk. I don't mind getting beat up in a fight. I don't want to lose money.
Yeah.
I hate losing money. What's the most amount of money you ever lost in one day or one deal?
I put 600 grand into this real estate project that I didn't vet properly with a partner that I didn't vet properly because I was involved with a partner I had with somebody else. And it was like 600 grand. And that was gone.
Yeah.
Now,
when did you know?
When did I know it was gone?
Yeah. I mean, when did you know? Okay. I didn't vet the deal. I didn't vet the partner.
Well, like within probably like 6 months.
Uh-huh.
Yeah. Within probably like 6 months.
What was the sign? What's the first thing you saw?
Well, just the partner was not who he said he was. He wasn't pulling things together. He was, not, the construction on the project wasn't operating properly. None of the other things he said were coming true. The telltale signs of somebody who doesn't have the money and he's like robbing Peter to pay Paul kind of a thing. I did end up getting like 200 back from that. So it was like a 400K loss. That was bad.
Yeah. You found 200 is what you did.
Yeah, I found 200 from the guy after lawsuits in court and whatnot. That was pretty bad. Another one I would say is I was doing a lot of Bitcoin mining. I still involved in Bitcoin mining today, which is, by the way, a great tax strategy. Thanks to Trump's one big beautiful bill, I can buy Bitcoin miners and wipe out all my taxes with that. And then I get Bitcoin back. But anyway, I was doing a lot of this early on. And again, I went down the crypto rabbit hole and I was like, oh, Litecoin mining is doing way better than Bitcoin mining. Let me go buy these Litecoin miners. And it was good for like a minute. And then they went to zero and they didn't make any money. That was another 6-figure loss. I could sit here all day, Grant, if you want to talk about losses. I'm sure we could have fun talking about those next to each other.
Yeah, well, no, I mean, those come with the game, the fact that you're surviving and doing well and expanding and learning. I think that's the most important lesson. Like there's going to be losses along the way. You just got to get up and play the game again. You gave me a prediction on Bitcoin. What do you think in 10 years? Let's see, in 5 years, the average rent in America is just under $2,000 right now. What do you think rents go to in the next 5 years?
We're going to keep printing money for sure. The problem is, we're seeing so much deflation right now. I'll have to see I hadn't really thought about the math here, so I want to kind of give an educated answer. I would say higher. Yes, for sure. I was originally thinking that I think real estate would be up about 50% in 5 years. But rents themselves, I might give it 3 or 4% a year, 5% a year. So maybe in 5 years, 20%, 25%.
So 2,400.
Yeah.
So where are mortgages?
2,500. Well, I think, as Trump just showed us in the Middle East peace deal, he's pretty good at getting what he wants. He's very, very, very adamant. He wants rates at 1%. That's where he wants them. And he typically gets what he wants. I think he's going to, obviously going to replace head of the Fed, Jerome Powell. He's already started replacing some of the Fed governors with doves. I think he's going to get 1%.
So that's where my next question was going to be, where are interest rates in the next 2 to 3 years?
Yeah. I mean,
you think they go there?
He says he wants 1%. I think he gets what he wants. I think before his term is finished, we're probably close to 1%.
So we go to 1%. We go to 1%. What happens to real estate prices?
Well, I mean, commercial properties that are sold off of like a cap rate for sure are going to go up, right? Because the costs go down, the prices are going to go up. So your type of real estate is going to go up, right? If the debt service comes down, the valuation of it goes up at the same cap rate, right? That's pretty obvious. I think the way real estate works, and you know this, and this is the tough lesson I learned, is that there's no such thing as the real estate market. There's thousands of markets. And so there's pockets all over. And so one area, one location, like even Miami, for example, right? The condos are getting absolutely smashed. But then other areas of Miami are still doing pretty good, right?
Yeah.
So I would say when rates go up, or I'm sorry, rates coming down, overall, it's going to be really good for real estate. And another thing that Trump's trying to do also is sort of get rid of the cap gains tax on those real estate assets so they could try to get some velocity back in the real estate market. So you add those two things together, yeah, I would expect real estate to go higher. They print more money, rates come down, homes get cheaper. Some of the boomers move out with some favorable tax treatment. And like I said, originally I was thinking homes would be up about 50% in 5 years. I've come down off of that a little bit. Maybe we'll give that 30-40%.
Guys, Mark Moss, okay, CEO of Market Disruptors. Watch him on YouTube, man. Fantastic. 23-year marriage. Awesome, bro. That's well done. 2 beautiful daughters. Author of the Uncommunist Manifesto and chief
Bitcoin strategist at Satsuma. It's a new Bitcoin strategy company following in the footsteps of Michael Saylor and Strategy. We launched one in the UK to take the UK market.
Yeah, that's fantastic, brother. Appreciate having you on the show today to talk about cash flow, your definition of cash flow.
Yeah.
That's cool. I got to think with that now. I'm going to have to go back and do some research. Really appreciate you being here. Appreciate all your success, man, and your willingness to share with others.
Pleasure, Grant. Thanks for having me on. Great to see you.
Mark. And thank you for joining 10X Money Talks. I'll see you next time.